Sunday the 5th of November, I'm going to give you an idea of what I think will happen this week after Friday's non-farm payroll number, which came out at around 150,000, which was about 30,000 less than expected. The market took that as a signal that rates have peaked and that the next move from the Federal Reserve will be down. And as a result, the dollar started to tumble and the stock markets absolutely took off. In fact, the US stock markets had dropped significantly last week and the week before, and this week we pretty much made up all the losses. I'm going to look at gold now on my 4-hour chart. We've gone sideways for about 3 weeks. We have a potential head and shoulders pattern. Left shoulder there, that's the head. There's the right shoulder. The neckline's around 1975. So if we break below 1975, that could be a sell signal. It could signal the completion of the head and shoulders pattern. Of course, if we break above 2010, which is the October high, that would suggest that the bull trend, which has been going for a month now, will resume and will push up towards the all-time high around 2070. Certainly 2040 would be the first target for me on a break above 2010. Let's have a look at the dollar index. I'm desperately trying to find a trend, or at least hoping a trend develops in some Forex pairs. It's really been horrible. I don't like sideways consolidation. Doesn't work for my strategy very well. You can see from the dollar index on the weekly chart, we've been in something of a bull trend, but we spend very long periods in these horrible sideways, choppy markets. Now, if I flick to the daily chart, zoom in, really tough. It's just so random, so erratic. For 1 year moving in this sideways pattern, we did have a good run up from July up until October. I thought that was probably a consolidation in this developing bull trend, but now it seems that that is not the case. After the release of the US non-farm payroll number on Friday, the dollar plunged, broke below the 105.50 area, which is a fib level, which had held so well before. On 2 occasions, we've broken it. So that does mean we're going to see continued pressure to the downside. Now, I'm hoping this is an actual trend that I can jump on. That trend line emphasizes the fact that we've broken out of this sideways consolidation pattern to the downside. Looks like we're going to 104.50, 104.40, a reasonable target on the downside. That's another 60 points, 50, 60 points to the downside. So that could easily happen this week. Let's have a look at some dollar pairs. The New Zealand dollar versus the US dollar has been in quite a bear trend. The dollar reversing. We're going to need to break above sort of 60, 20, 60, 30, which is the 100-day moving average, and this trend line going back to August. Break above there would be my buy signal. Otherwise, we're going to be stuck in this sideways range. I really hope we're not just establishing a new sideways range by popping up here. If I stick another trend line on here, something like that, you can see that the lower trend line is roughly parallel to the upper trend line, and that would be the channel. I'm hoping that is not the case. I'm hoping we break higher for a buy signal. Aussie dollar versus the US dollar has also been in some horrible sideways patterns of late. We were in this one throughout most of the summer, then we broke down. For the last couple of months, September, October, we've been in this horrible sideways chop, up for a day or two, down for a day or two, not a pattern I can trade. We've broken above the upper trend line of the consolidation pattern. So I'm going to lean towards being a buyer of the Aussie versus the US and hope that this is a breakout that we can trade, maybe a swing trade opportunity to get long and then run it. And I'd love to see it up to 66.00, 66.20. We're going to have to hold above 64.85, 64.75. for that to happen. US dollar versus the Canadian dollar, we did break above this upper trend line, which I thought was significant. However, with the non-farm payroll numbers out, I'm just going to try and show you where that trend line goes. Here we go. That trend line goes back to 20. So that was an important trend line, which had been tested 3 times. And when we finally broke above it the week before last, it really did look like a buy signal. But of course, the bulls were crushed by the non-farm payroll number. Now, the most important thing that I think about this weekly chart now is the bearish engulfing candle. The new high at the beginning of the week, then we collapsed and we closed the week below the low of the previous week. We've probably got a trend change, false breakout above the trend line. We are overbought on the weekly chart as well. This is the confusing chart for the euro versus the US dollar for the whole of 2023. Pretty horrible sideways chop. After Friday's numbers, we've broken to the upside. So we're back up through the 500-day moving average, which had worked as resistance in October, catching the exact high. We are hitting some short-term resistance on the 4-hour chart, and actually on my trade levels here for the day for my subscribers, I've got a sell 107.50, 107.70, because it is a good resistance level on the short-term chart, and maybe pull back maybe to around 106 91.0680 before the bull trend really ignites. Cable, the pound versus the dollar, has also soared. We were in this triangle consolidation pattern, and of course the pound has rocketed straight up through the 50-day moving average. We're heading towards the 500 and the 200-day moving average. Things do look pretty positive. So for now, I'm going to hope that this is the beginning of a trend that we can trade for at least a few days, hopefully weeks, and I will be a buyer of cable on any weakness. Dollar yen, this is interesting. Since 2011, the dollar yen's been in a bull trend. Look how nicely this pattern worked. Multi-year descending triangle that worked beautifully once we did break above it and held above the 200-day moving average. Look how the price rocketed. Now, as I zoom in on this, you see we have a potential double top pattern as we fail to break above the high from exactly a year ago. We got to 151.94. This week we got to 151.74. So we were 20 pips away from the high of exactly 1 year ago. We've got this sort of shooting star doji candle on the weekly chart. So this is increasing the chance that this is a double top pattern. I've talked about it all week actually. And with this candle formation on the weekly chart, I'm starting to become more convinced that this is a double top pattern that will play out. Short-term chart, we do have a support area around 149.50, 149.40. It does look like the short-term support has been broken. So I think we're going to see further downside pressure. And in fact, 148.30 looks like a reasonable first target. I wouldn't be surprised to see 146.50, 146.00 eventually, perhaps before the end of the year. Perhaps the good news for financial markets is that we don't have any really important numbers out this week, perhaps initial jobless claims on Thursday. So hopefully we can have more of a natural flow in the market and maybe get some decent trades on without having to worry about the release of some numbers that can send the market haywire. Let's see if that helps us trade during the week.